Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Picks. I am Jeremy Mullen, and I will be doing Park Hotel and Resorts. Nina will be up after me to do her pick, but first, let's dig into PK Park Hotel and Resorts. This is a prominent publicly traded REIT with a diverse portfolio of hotels and resorts. Park has seen a lot of earnings beats lately and pays a dividend of 7%. This is kind of a dividend play, kind of a value play. Estimates are slowly trending higher. And with the stock selling off in recent months, I like PK here. It's starting to look attractive at these levels, especially with the atmosphere of the markets changing, with interest rates going lower. I think this hefty dividend is a nice place to sit while the company kind of kicks butt and keeps beating earnings. So let's dig into this and see why I'm a believer that the stock will eventually be there. Okay, let's look at the screen and the profile page here. You can see the Zacks ranked number 2. Looking at the style scores, we have an A in value, and that's because it has a P under 7. So this is definitely a value opportunity for you value investors. Now on the growth side, not so much growth. So if you're looking for those NVIDIAs, those Teslas, this is not the stock for you. Continue doing what you do. Looking at market cap wise, we have a $3 billion company, so a smaller company. And here's that dividend of almost 7%. Now this is a volatile stock, so for some of you guys who like to trade, this would be a fun one to trade around, build a core position, and collect this dividend while you wait for this longer-term story to pan out. And so what is the long-term story? Well, let's look at the earnings here. We can see that the company always beats. They do a great job of managing their earnings and beating every time, which allows them to pay that dividend every time and give cash back to investors. Now, you can see, obviously in 2020 when travel wasn't great, we struggled down here. But lately, we have been beating earnings. You can see a nice quarter here of 23%. And then the stock broke out after a 16% EPS beat at the end of 2023. So pulling back here, I liked at these levels. Got some nice support here. Let's look at the earnings estimates. You can see here the magnitude. We're seeing more analysts raise estimates, especially in the longer term, than lower them. And that's given us a nice trend higher, especially on that longer term. So let's look at the chart here and see where these earnings are going. This is the pricing consensus chart. And you can see at 2026 way up here, which is nice. So every year we're kind of stepping higher and the price of the stock just hasn't caught up yet. So this is a great opportunity for investors to get into the stock, collect that dividend while this earnings story kind of plays out slowly over the next couple of years. So let's look at the chart, and I can show you what I'm seeing. This is the chart going way back to 2017, and you can see pretty stable stock here going all the way back there. And then, of course, COVID hit. So back to 2017, this was actually a spinoff of Hilton Worldwide, which I'm sure everybody is familiar with. And they basically spun off 43 premium brand hotels, and I think they got over 25,000 rooms now. So a big company, but then of course, when everything shut down, we plummeted down to $4 a share, came right back the next year. You can see slowly struggled with interest rates going higher, but we're back. And with that tide turning, I think, like I said, a great opportunity with this long-term support here. Now let's zoom in and I can show you what I'm seeing when we look at the moving averages and the Fibonacci retracements. So drawing back from November's low to April's high, we've slowly come down into this buy zone. You guys who follow me, you know I love the 61.8 to halfway back Fibonacci buy zone. Didn't quite test the 61.8, but now we're coming back up over the 21-day moving average into this 200-day moving average and the 50-day moving average. Now, if this crosses below, there's going to be some sell signals, but I like that is the 50-day under the 200-day. Some sell signals there, but this can get over both of these lines. It kind of confirms this buy zone, and you have a long-term move up here to targets around $20. So I really like this one on both the fundamental and technical front. This is going to be one for patient value investors who are willing to get paid while they wait that nice 7% dividend. And like I said, the interest rates coming lower. We're going, if the 10-year gets under 4, stocks like this are going to start to look really attractive, and the price should go higher in these kind of names. Okay, that's it for me and PK. Here is Nina with her pick.
Thanks, Jeremy. I'm Neena Mishra, and my top pick today is Walmart, ticker symbol WMT. And Walmart, we know, is the world's largest retailer. And over the past few years, the company has kind of evolved from being just a brick and mortar retailer into an omni-channel operator. So they operate so many different type of variety stores, discount stores, super centers, Sam's Club, and also e-commerce websites, walmart.com and samsclub.com. So the company reported excellent first quarter results. They beat on the top and bottom lines and also raised their guidance for the year. And the main reason is that companies continue to gain market share, particularly among higher income consumers. So we have seen that consumers have become increasingly price conscious, and that is mainly because of years of steep price hikes, particularly in areas like groceries. And while inflation has started moderating, prices are not expected to go back to pre pandemic levels. So consumers continue to want more bang for their buck. And Walmart is gaining market share among higher income consumers because consumers are trading down. So they defined households earning $100,000 or more as higher income consumers. And they have seen that these consumers have started coming to Walmart and spending in areas like grocery and grocery, which they define as which includes food items, household staples, beauty and personal care items. That accounts for about 60% of uh, Walmart sales, according to Bloomberg data, and that area continues to fuel their growth. Now, let me share my screen and let's go to the quote page on Zacks.com. So Walmart is currently a Zacks rank number 2, buy ranked stock. C for value, B for growth, C for momentum with an overall VGM score of B. And the industry rank is currently top 8%, though the sector rank doesn't look very good. Now, let's go to detailed earnings tab, and we will see that earnings estimates have moved up significantly since the company reported its first quarter results. So you will see that the analysts have been raising estimates, and estimates have gone up significantly for the current year as well as the next year. And you will see that over the past 4 quarters, the company has delivered nice earnings surprises. And if we look at the longer term price consensus and EPS surprise chart, you will see that after three misses earlier in the past 5 years, over the past 2 years or so, 2.5 years or so, the company continues to beat estimates mainly because of the change in strategies that we mentioned. And now they are trying to focus a lot on higher margin items, particularly clothing, furnishing, etc., and also focusing a lot on their uh, e-commerce and delivery businesses, which are preferred by higher income consumers. And another reason why I like Walmart is it's a shareholder friendly company. So currently paying a dividend of 1.2%, not huge, but decent dividend. But Walmart is a dividend aristocrat. They have been raising their dividend since 1975 and also continue to buy back their shares. So those are the reasons why I like Walmart, and it is worth a look. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with some more interesting stock picks.